banking concept can be complicated, but I'm going to break it down and make it really easy to understand. I'm also going to give you free one-on-one access to me or my team at the end of this video. There are 4 main components to economic value that we focus on and promote through our strategies: certainty, control, efficiency, and liquidity. You'll see all 4 of these as we walk through this. You should be receiving some form of income. You can be working for someone else, running your own business, or you may even be retired. Yes, this can work for you too. When you receive your income, there are really only 2 things you can do with it. Money is either saved, which there are various ways to save, or it is spent in one form or another. But what if there was a place we could send our money to first to capture as many benefits and guarantees? We like to call this our family bank. Here are the benefits and guarantees. You have certainty in the form of guaranteed uninterrupted growth. You have control, which means you don't have to have someone else's permission in order to use it. You have efficiency in the form of leverage. Yes, you can borrow against it and make your money work in multiple places. You have liquidity. Unlike qualified retirement plans, you have access to this pool of capital that you are creating. You can also earn dividends. It's private, which means very little, if any, reporting to the IRS. It grows tax-free. There's multiple layers of protection in the form of death benefit, chronic illness rider, disability waiver of premium, and creditor protected against lawsuits in most states. It's non-correlated, not tied to the market, which means zero volatility or no losses. No restrictions. Your money can be used on major purchases, investments, or really anything that you can think of. Remember, it's infinite. Now, as we flow our money through our family bank, capturing the benefits and guarantees, we can also simultaneously decide how we want to save or consume our money. Okay, you may be wondering how. I've said this since day one. If you have a basic understanding of real estate, this will be very easy to grasp. Let's say you buy a property in a guaranteed growth market. As you make payments on that property, a portion of the payment is applied to the principal balance, allowing you to build equity in that property. And once you have some equity built up, often the bank will allow you to open up a HELOC, home equity line of credit, so you can access the equity for whatever you like. It's kind of like this, but so much better for all the reasons that I listed earlier. But very simply, unlike real estate, you have complete control of the environment. Okay, you've made it this far, so let me tell you what asset we are using. It's called dividend-paying whole life insurance, but not like what you've heard about from talking heads out there. We specially designed this policy to accomplish your short-term and long-term goals. Just like with real estate, as you make premium payments into your policy, a portion of that goes towards the equity, or what we refer to as cash value. The beauty of this, unlike real estate, is your money can only go up. Think savings account on steroids. Now, these mutually owned life insurance companies that we work with have been around for over 150 years. And they have a pool of reserve funds which allow us access and uninterrupted growth of our dollars. Because you can take collateralized non-credit scored loans against your cash value or equity in your policy, and the only question they ask is how much and where to send the check. Now you get all the benefits and the access to your money. And that is how you gain certainty, control, efficiency, and liquidity of your wealth.